A lovely afternoon to everyone. This is Miss Kurt back to welcome you for today's webinar. First off, on behalf of our team, I would like to greet everyone a happy holidays ahead and thank you for joining us today. As we are coming close for this year, our team aims to give you insights on the recent publications relating to updates on one of the most sought topic for corporate tax, which is its application on the income of free zone person. This webinar aims to provide you with the key updates for qualifying free zone persons, their qualifying income, and the excluded and qualifying activities. Based on the new relevant decisions, which are Ministerial Decision number 265 of 2023 and Cabinet Decision number 100 of 2023. Joining us today are Ms. Mariam and Mr. Muhammad Sharif Nadim, who will help in addressing your questions or queries that you might have on our relevant topic for today. As usual, we'll be starting by discussing the topic on the first half of the session. You may send your questions in the message box below and we will have it addressed on the second part. So as a webinar pointers, we will first discuss about qualifying free zone person, the conditions and their limitations, as well as outlining the adequate substance and outsourcing, to be followed by defining the key terms that would be important, which are domestic permanent establishment, excluded activities, qualifying activities, and qualifying intellectual properties. This will be followed by the discussion of qualifying income, wherein we will be discussing about the categories and the taxable income of qualifying free zone person. Lastly, we would be discussing about the minimis requirement, the conditions that are mentioned on the relevant publications, as well as clarification on non-qualifying revenue and the calculation for qualifying income in meeting the de minimis requirement. Qualifying free zone persons are those who met the criteria as prescribed on the corporate tax law and additional conditions on the relevant decisions. So they can benefit on the preferential tax rate of 0% on their qualifying income. So as presented on the screen, we have 6 conditions that a free zone person must meet for them to be called as a qualifying free. So the first condition is maintaining adequate substance in the state. For maintaining adequate substance in the state, there are several criteria has to be met to identify whether the free zone person has met this requirement. So for this one, we'll have it further discussed on the following slide, which would be based on the new decision, which is the Cabinet Decision number 265 of 2023. The second condition is the free zone person must derive qualifying income. So as I have mentioned, qualifying income are those that would be subject to 0% corporate tax rate. Then on the third condition, for a free zone person to be considered as qualifying free zone person, they must not elect to be subject to the standard rate of corporate tax, which is 9%. This is followed by complying with the transfer pricing requirements and the necessary documentation. So obliging to align with the arm's length principle, most especially while dealing with their related parties. On the fifth condition, we have the meeting with the de minimis requirements. So this refers to the proportion of revenue based on non-qualifying revenue and total revenue, either the percentage as prescribed or the amounts as prescribed that the free zone has to meet. Lastly, the preparation and maintenance of audited financial statement. So under corporate tax, there are a few categories of taxable person that has to actually prepare and maintain their audited financial statement. A few of them are those who have revenue exceeding 50 million AED, and another one is for qualifying free zone persons. So qualifying free zone persons are expected to maintain and prepare their AFS based on the accepted reporting standards in the states, which is the IFRS. So if a qualifying free zone person, like at any time during a tax period, fails to meet the conditions as mentioned, they shall cease to be a qualifying free zone person from the beginning of the relevant tax period and the subsequent 4 years tax periods. So moving on with the discussion of the adequate substance, the new cabinet decisions have actually clarified the criteria on how the adequate substance can be met by a free zone persons. So a qualifying free zone person shall undertake its core income generating activities in a free zone or a designated zone, depending on where such activities are required to be conducted. So these are having regard the 3 points that was mentioned, which is having an adequate assets, having a number of qualified full-time employees, and an amount of operating expenditures. So on having a number of full-time employees, it should be noted that on considering this one, they have to only consider the full-time employees itself for it to be considered as qualified employees. So core income generating activities can be outsourced to another person in a free zone or a designated zone, provided that the qualifying free zone person has adequate supervision of the outsourced activity. So core income generating activities which must be undertaken in free zone consist of activities with significant functions to the business that drives the business value for each activities carried out by a qualifying free zone person. So this must not be exclusively or mostly support activities. Outsourcing to another person in a free zone or a designated zone is also allowed for core income generating activities as long as the qualifying free zone person holds adequate supervision on the outsourced activity. And on the other hand, outsourcing for qualifying intellectual property can be to any other person in the state and to any other person who is not a related party outside the state. Although the decision have not actually provided a clear guideline on what exactly does and adequate supervision constitutes. Although a qualifying free zone person would be subject to a preferential tax rate of 0%, there are certain limitations that they would also commit to. Like, for example, there are certain reliefs available in corporate tax which they will not be able to avail if they would be considered as a qualifying free zone person. So the first one is transfers within the qualifying group, wherein the companies that are part of a qualifying group can transfer assets and liabilities between themselves at their net book value. So this means that the transfer can be carried out tax neutrally, where no gains or loss needs to be taken into account in determining the taxable income in relation to the transfer. So this specific condition would not be available for a qualifying free zone person. The next one is for transfer of tax loss, followed by small business relief, wherein the small business relief has a threshold of 3 million revenue, and businesses who will not cross this threshold will be treated as not having derived any taxable income for that relevant tax period. And again, qualifying free zone person will not be able to avail of this specific relief. Lastly, a qualifying free zone person would not be able to form or join a tax group. Now we would be proceeding with the key terms that is important for you to be able to understand exactly about the qualifying income, excluded activities, and qualifying activities. So the first one is on domestic permanent establishment. On the relevant decisions, income, it is mentioned that income attributable to domestic permanent establishment or a foreign permanent establishment are not considered on the qualifying income. Hence, it is important to know what exactly is a domestic permanent establishment for a qualifying free zone person. So, a domestic permanent establishment could be a place of business or other form of presence of a qualifying free zone person outside the free zone in the state. So we have here three important points for you to know or for you to be able to identify like what exactly is a domestic permanent establishment. So it could be any fixed or permanent place in the outside free zone through which the business is conducted. On the second one, where a person has and habitually exercises an authority to conduct a business or business activity in the state, like on behalf of the non-resident person. And lastly, if the qualifying prison person has any other form of nexus in the state. So the domestic permanent establishment of a qualifying free zone person will be considered distinct as though it were an independent entity and treated as a related party of the qualifying free zone person. So now moving on with the Ministerial Decision number 265 of 2023, where it repeals the previous decision released, specifically the Ministerial Decision number 139 of 2023, have provided a much clearer guide and definition on each of the qualifying activities and excluded activities, which we'll be discussing now. So we have here few activities that they identified as qualifying activities. The first of which is the manufacturing and processing of goods or materials. So on the decision, the difference between the manufacturing and processing was outlined, wherein manufacturing is referred to as the production, improvement, or assembly of products and materials from raw materials or components. On the other hand, processing could refer to preparation, treatment, transformation, or conversion of goods or materials into another form of good or material for commercial or industrial use or sale. The decision have also clarified that manufacturing of goods is a separate qualifying activity from distribution of goods. Hence, it is expected that the income generated specifically from the distribution of goods or materials should be identified, excluded, and treated separately as a qualifying income based on the rules that is applicable for distribution of goods itself. So the next qualifying activity is the trading of qualifying commodities, which has been added from the previous list that was released. So trading of qualifying commodities could refer to physical trading activities of qualifying commodities and associative derivative trading used to hedge against risks involved in such activity. A qualifying commodity could refer to metals, minerals, energy, and agriculture commodities that are traded on a recognized commodities exchange market in raw form. So the recognized commodities exchange market are any licensed and regulated commodities exchange market that is established in the state, or otherwise it is any commodities exchange market that is established and recognized outside the state of equal standing. So the third qualifying activity that they have specified is holding of shares and securities for investment purposes. So they have classified it into two, which are shares of any class in the share capital of another juridical person or other types of equitable interest that entitle the holder to receive profits and liquidation proceeds, whether as a legal or a beneficial owner. Or it could also be a negotiable or non-negotiable financial instruments, with the exception of holding of financial or investment instruments that are issued in pursuant to securitization of receivables from a non-financial asset. So it is important to highlight that for a holding of share or for a share of securities to be considered as being held for investment purposes, it has to be held for an interrupted period of at least 12 months. So the next one, we have the ownership, management, and operations of ship. So this activity shall not include specifically the ships that are used for local transportation or leisure or recreational purposes, or like for example as of floating hotels, restaurants, or casinos. So it should also be noted that the ships must be used for international purposes. This specific activity could include, like for example, towing activities and the provision of general assistance to ships at sea or the dredging activities at sea. We also have on the qualifying activities the fund management services, which includes the activities of portfolio management, risk management, discretionary and non-discretionary fund management services, and other services relating to the day-to-day management and operation of an investment fund by a fund manager that is appointed by the fund or its investor. This is to be followed by wealth and investment management services, which includes the activities of providing discretionary and non-discretionary investment management and advisory services, portfolio management, and wealth and investment advisory services. We also have the headquarter services and treasury and financing services to its related parties. So headquarter services to related parties could include like the administering, overseeing, and managing of the business activities of related parties. Some of the functions as specified includes as well the provision of senior and general management, captive insurance services, administrative services, procurement services, business planning, and development. While on the other hand, the treasuring and financing services to related parties includes the provision of cash and liquidity management, financing, debt management, and some financial risk management related advisory to related parties. Financing and leasing of aircrafts is also listed in the qualifying activities, as well as the logistic services. And then lastly, we have the distribution of goods or materials in or from a designated zone. So it is very important to know that the goods or materials must come from within or from a designated zone, or the activities are conducted in or from a designated zones And if the goods or materials are entering the state, it must be imported through the designated zone as well for it to be considered as a qualifying activity itself. Then any activities that are ancillary to the qualifying activities as mentioned will also be considered as a qualifying activity. Then we will now proceed with the excluded activities that is mentioned in the ministerial decision. So one of the notable changes from the previous decision is the ownership or exploitation of intellectual property assets are removed from the excluded activities that was released before. So we have here the updated list of excluded activity, which is the first one is transactions with natural persons that are subject to certain exceptions under qualifying activities specifically related to shipping and aircraft, plus fund, wealth, and investment management. The second one is regulated banking activity, followed by regulated insurance activity, except activity that would fall on a regulated reinsurance services that was mentioned on the qualifying activity. We also have on the fourth point is the regulated finance and leasing activity, except the activity that would fall again on the treasury and financing services related to related parties, and financing and leasing of aircrafts, including engines and rotable components. Then lastly, any activities that are ancillary to the excluded activities as mentioned would be considered as excluded activities. The new decision have also introduced the qualifying intellectual property as part of the qualifying income, as well as the determination and calculation, which is outlined in the ministerial decision that we will be discussing later on. So basically, the qualifying intellectual properties refers to patents, copyrighted software, and any right functionally equivalent to a patent that is both legally protected and subject to a similar approval and registration process to a patent. So this does not exactly extend to any marketing related intellectual property assets, like for example, trademarks. So we have here on the presentation the calculation on how you'd be able to identify the qualifying activity, qualifying income, which is qualifying income equals qualifying expenditure plus the uplift expenditures over overall expenditures multiplied by the overall income. The qualifying expenditures means the expenditure incurred to fund research and development activities conducted either by the qualifying free zone person or any outsourced to any person in the state or any person outside the state that is not a related party directly connected with the creation, invention, or significant development of the qualifying intellectual properties. On the other hand, the overall expenditure could refer to the total expenditures incurred to fund research and development activities conducted either by the qualifying free zone person or again outsourced to any person. This expenditure should be directly connected with the creation, invention, or significant development of the qualifying intellectual property. Then we have as well the overall income, which means the royalties or any other income derived from the qualifying intellectual property, including embedded intellectual property income derived from the sales of products and the use of processes directly related to the qualifying intellectual property. And lastly, to define the uplift expenditures, this means the qualifying expenditures, which is increased by 30%. And it should be noted that the uplift expenditure shall be applicable only to the extent that the qualifying expenditure after being uplifted is less than or equal to overall expenditures. For qualifying intellectual property to be considered as that one, the person has to keep proper books, records, and documentation, which could provide which should be available to the authority, and which should be serving as a proof for ownership and the right to exploit the qualifying intellectual property, as well as some documents referring to qualifying expenditures and overall expenditures incurred, the overall income derived from the qualifying intellectual property, as well as the link between the qualifying expenditure and overall income from the qualifying intellectual property. Now we would be moving on with the Cabinet Decision number 100 of 2023, which have given an updated categories of income that would fall as a qualifying income. So it can be noticed that relating to ownership or exploitation of qualifying intellectual property are added on the list, while incidental incomes are removed from the qualifying income. The criteria of serving no independent function has been removed from the meaning of ancillary and include those activities with minor contribution to the main activity and closely related to it. So on qualifying income, we have 4 points that is mentioned. On the first one, this refers to any income derived from transactions with other free zone persons, except for income derived from excluded activities. So the income can be considered as derived from a free zone person if the beneficial recipient is a free zone person itself. And a beneficial recipient refers to the person who has the right to use and enjoy the services or the good and does not have a contractual or legal obligation to pass on such service or good to another person, meaning it's going to be the last consumer. And the term good shall mean tangible or intangible property that has an economic value in dealing, including movable and immovable property. Any income derived from transaction with a non-present person could also fall under a qualifying income, but it is going to be only in respect of qualifying activities that we have discussed, which are not included on the excluded activities. Then lastly, any other income provided that the qualifying prison person satisfies the de minimis requirement. On the right part of the table, we have the taxable income of a qualifying prison person, which would be subject to 9%. So these are the income derived again from the ownership or exploitation of the intellectual property that is not considered as a qualifying intellectual property, and income in excess of a qualifying income calculated that we have discussed a while back. Also, income attributable to a domestic foreign permanent establishment or foreign or domestic permanent establishment are considered as a taxable income of any such establishment for that period, which is to be calculated as if the establishment were a separate or independent person that is a related party of the qualifying prison person. Then on the third point, we also have income attributable to immovable property in free zone person, which has two categories. Like for example, if the transaction is with a non-free zone person in respect of a commercial property, and any other person in respect of non-commercial property. We are now on the last part of the discussion, which is on the de minimis requirement. The de minimis requirement are considered to be met if the qualifying free zone person's non-qualifying revenue does not exceed the prescribed percentage of the total revenue, which is 5%, or the prescribed amount, which is 5 million, whichever is lower has to be considered. So basically, the non-qualifying revenue refers to these revenues such as the revenue derived from excluded activities or activities that are not qualifying activities for the other party to the transaction is a non-free zone person, or if the transaction with a free zone person where such free zone person is not the end recipient or the beneficial recipient of the goods or services, while the total revenue refers to all revenue that is derived by a qualifying free zone person in a specific or in the relevant tax period itself. On calculating the non-qualifying revenue as well as total qualifying revenue, there are specific things that has to be noted. So these revenues should not be included on the calculation itself. So first, we have the revenue that is attributable to the immovable property located in a free zone, wherein, as I have mentioned, if the transaction is with a non-free zone person in respect of a commercial property and any other person in respect of non-commercial property, as well as revenue attributable to a domestic permanent establishment or foreign permanent establishment of the qualifying free zone person, or revenue that is derived from ownership or exploitation of intellectual property, except for the revenue related to the qualifying income. So if you would notice, these are mostly the revenues that is almost in the same pattern as the taxable income of the qualifying free zone person. So this specific revenue must not be included in the calculation for the taxable person to meet the de minimis requirement. So that's it for the discussion.